All right, what's going on YouTube? I'm Rob.
And this is Nick.
Coffee and Crypto here. We are back with a market update. We got some important things to discuss given the current state of the market. And here we are sitting just slightly above a $20,000 Bitcoin. Some may say this is the bottom, but we will talk about that. So let's get into it. We got a couple things that we want to discuss with you and give you a heads up on because from our perspective, this seems to be a pivotal month with everything playing out in the market and cryptocurrency. So, Nick, why don't you take us into the price, the chart, and what you're seeing from a technical analysis standpoint?
All right. We are still taking a look over here on the weekly chart, still sitting below the 200-week moving average, which is a bearish sign. It looks like we went back up and tested this and bounced right back off of it. We bounced all the way up to like 22,000 and came right back down. So that is acting as our resistance right now. So at the moment, there's not really much to say technically. We're kind of just in this ranging mode between $17,000 and $22,000 here until some new information comes out that we're going to talk about here. We got the CPI numbers coming out on Wednesday and the GDP numbers coming out at the end of this month. So depending on kind of what happens there, I see us kind of just chilling here in around the $20,000 mark and just kind of bouncing around until the market gets more information. So
Yeah, that's basically where we're at. We have those two important announcements coming out. One is this week. So on this Wednesday, we have the CPI, which is the inflation, and then the GDP, which is the end of the month. And if that's negative, that would signal that we are in a recession. Really depends. I mean, this could go either way. If the numbers come out that the inflation has been improving and it's better than we expected, that could be potentially short-term bullish, and we could see a short-term bounce, which could be anywhere from, I think what would be more likely is in the 28 to 30,000 range, like a 50% move. Nick has a different opinion, and what do you think that would be?
it really depends. There's a lot to talk about because we also have the midterm elections coming up. I honestly think that the CPI numbers may come out better than expected, and it's going to give the Fed some kind of room to either just hold the interest rate steady, and that might actually give some positive, like a positive pump to the markets. I think that we could even see a rally up to the $28,000-$30,000 and possibly even 35 to 40,000 in Bitcoin before we finally roll over. I think coming into this midterm elections, like I think it's in September, right? Is the midterm elections? I think that the current administration is going to want to make it look like they're doing like all the right things. So there's some pressure there for them to get the markets pumped up into those elections. So that's kind of what I will be looking for before the macroeconomic environment of the Fed tightening could roll us. I mean, it really depends. I don't know if we're going into a very long recession or a depression or what, but um, we would have to go into like a state of like civil unrest, like we were talking about just before we started filming this video. Like people stop paying their rent, and then at that point, if you're a real estate investor, what are you going to do? If if you have a bunch of loans on like say you have 50, 60 properties and half your tenants aren't paying your rent, you're not going to be able to make your payments either. So it could get into a hairy situation. I'm kind of interested to see how the Fed and the government is going to handle a situation like that if it unfolds like that. So
Yeah, some good points there. I think if the numbers are better than expected this month and we do have a pump, it would be more likely that we see something 40 to 50%. I personally, I don't think we would see like a 80 to 100% move, whereas Nick thinks that's more possible. So we have different views. I think so. I think that's if the numbers are better than expected. Personally, I don't think the numbers are going to be better than expected. I think we're going to print GDP negative. It's going to show we're in a recession. Inflation, you know, gas has improved a little bit, but not a lot. We're still, almost $4.50. And rent and prices and everything just keeps going up. So I don't think that's going to improve. So what happens next? I think there's more room to the downside. I mean, we could just stay in this range 22,000 to 17,000, we could, dip down again to that 17,000 bottom and then just range there. I don't necessarily think these numbers would send us lower. I think what would have to send us lower is some sort of, uh, another event like capitulation, black swan, civil unrest, something like that, that would send us down to the low teens, 12, 13, or even below 10,000, which we talked about before this video. And what would be some sort of event like that? Well, we were talking about this, and it could be some sort of civil unrest scenario where inflation is just sky high, rent is sky high, which it is. Rent is increasing significantly. So consumers are in a tight spot where houses have gone up so much. So it's very difficult to buy a house, especially if you're a first time home buyer, because prices are just, sky high. Then on top of that, rent is going up increasingly. So from both ends, you have the person who's renting, that their rent is now going to be unaffordable. And then on the other side, the rentor who owns that property through a mortgage, through a loan, is now not getting their rent payments. So, that's just going to turn into a bad scenario where people can't pay rent, people can't collect their income from their rental properties, people can't afford to live or possibly even to eat. And then what happens then? Do people start rioting? Is there civil unrest? Are people getting evicted? People don't have a place to live. So if there's some sort of really bad,
I mean, it's already started to happen. Like we saw, like I want to pull up the new home or the home sales data, the inventory. So let's pause it real quick. All right, so we finally found the monthly supply of home inventories, and you can see just in the past year, it's been on a rising trend. This looks very similar to what happened back in 2006 to 2009 timeframe, where we're just constantly increasing. Right now, we're right around 8.3 months supply. So if you kind of go back to where we would have been, we're like in the July 2007 timeframe. So if things are going to be as bad as they were in 2008, 2009 timeframe, we still have a little bit further to go. So we'll see. What do you think about this chart, Rob?
I think it's just another interesting point, because now we're getting to a point economically where things are tight, money is tight. Um, People are just having issues with their expenses, and now you're getting to a point where people need to sell their homes because they can't afford it anymore. And now there's more homes on the market, but not enough buyers because interest rates have been raising. Money's being taken out of the economy. People are getting laid off from jobs. Inflation's high, so everyone's cost has gone up across the board, and there's less money in the economy. So it's just creating, this is what it was intended to create, this type of scenario to curb inflation. But, it's definitely troubling given the macro. I just think we're headed towards, more pain, recession wise. But if we go back to the chart, back to wrapping up our thoughts, I think if we do get, bad numbers, inflation, GDP, we're going to dip lower. We could range in that 17 to 22,000 range, or dip to the low teens. But to get like under 10,000, I think we would need to see some sort of civil unrest, or potentially even, some sort of war. Otherwise, I don't see us dipping below $10,000. Like, that just seems so unlikely and so low. So yeah, those are my thoughts. I think if the numbers are bad, we continue to dip lower, maybe around that 17,000 range, 15 to 17,000 range. And yeah, we'll see where we land these next couple of weeks. So Nick, want to wrap us up here?
I will wrap us up here. I agree with you on getting anywhere below $10,000 to $12,000 is going to be an extremely difficult to get below, because if you look at all of these yellow bars here, that's the amount of Bitcoin volume that traded at those price levels. So there's a huge amount of support. So I do believe there would have to be some sort of like civil unrest, war, something just crazy, like huge black swan event for Bitcoin to fall below those levels, just because so much of the volume has traded down there. Say one more thing.
All right, just to close this out, what can you do as a trader, investor? Well, a couple of things. If you've already bought in lower, like 17, 18, 19,000, and we get a little bit of a bounce up to 25, 30,000 or even more, you can just sell and then you could profit off that, because I think the macro is bearish, right? If you haven't bought in, you're still on the sidelines and you think it's going to go lower, you can just set buy limit orders and dollar cost average on the way down. So if we're at 20,000 now, you could buy in a little bit now. You can set a limit order for, 17, 18,000, 15,000, and just keep dollar cost averaging if we continue to go down. And that's where the trend is. So, you can play both sides in this scenario right now. So I think that'll wrap up my thoughts.
Yeah, so it's pretty much a waiting game until we get more information.